Welcome to Daily Market Briefing. I'm your finance reporter, here with the market setup, sector rotation, and the headlines that matter before the next session.
Welcome to your Daily Market Briefing for 2026-03-26. Today's market was shaped by Fed's Miran favors looking through oil price spike, says concern is about job market, Yahoo Finance. While the index tape stayed centered on SPX minus 1.74%, and leadership came from energy utilities. Here is the broad market snapshot. S&P 500 down 1.74%, Nasdaq 100 down 2.38%, Dow Jones down 1.01%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were energy plus 1.57%, utilities plus 0.18%. Laggards were gold, minus 3.76%, technology, minus 3.11%. Across global markets, the session leaned risk-off globally, with broad market retreat across regions. Asia was under the most pressure, with Shanghai leading the fall. Stepping back, broad risk tone was weak, with SPX at negative 1.74% and NDX at negative 2.38%. Relative strength stayed with XLE, XLU, while GLD, XLK lagged the board. On the S&P 500 heat map, leaders were energy plus 1.57%, utilities plus 0.18%. Laggards were semiconductors, negative 4.75%. Communication services, negative 2.36%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprises hot, long-duration trades could stay under pressure. Commodity action was split. Brent led, while gold lagged, so the move looked selective rather than broad-based. The index board leaned lower, with Nasdaq carrying the weakest tone and Nikkei holding up best. Megacap curves were mostly negative, which points to a broad tone move more than a single-name story. Forex showed a risk-off currency tone, with the sharpest move in AUD/USD and the best relative strength in USD/JPY. Crypto remained constructive, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed on leadership, stayed concentrated in energy and utilities. The pressure point remained semiconductors and communication services. Tomorrow's setup comes down to the next macro events, yield direction, and whether today's leadership can hold. Follow through on Fed's Miran favors looking through oil price spike. Says, concern is about job market. Yahoo Finance also matters, because the tape is still sensitive to macro headlines. That is the key takeaway for today's market. Broad risk tone was weak, with SPX at minus 1.74% and NDX at minus 2.38%. Relative strength stayed with XLE, XLU, while GLD, XLK lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Today's finance headlines centered on Fed expectations, stayed front and center. Geopolitical risk kept pressure on sentiment and energy. From Yahoo Finance, Fed's Miran favors looking through oil price spike, says concern is about job market. It can shift rate cut expectations and reset pressure on growth and duration trades. From Yahoo Finance, this single greatest stock market predictor has never been more bearish. It can quickly influence market tone and cross-asset positioning. From CNBC, Global Forecasting Group sees U.S. inflation at 4.2% this year, much higher than Fed estimate. It can shift rate cut expectations and reset pressure on growth and duration trades. It keeps the focus on macro pressure, rather than single stock noise.